Leviathan News. I'm your host, Samuel McCulloch. Leviathan News is the best place to find all of the news around crypto, DeFi, stablecoins, and everything in between. And today, I want to talk about stablecoins that are not dollars, because right now, the stablecoin marketplace is dominated by the dollar. If you look at trading volumes and just supply across the entire space, Tether, USDC, DAI, Frax make up around 95% or more of all transactions that are taking place on crypto networks at the moment. But this is probably going to change in the next 5 to 10 years as other entrants come in that provide a more localized experience for people to get access to currency in their local markets. And this is important for many reasons. And we're going to talk about that today with, I think, the perfect person to have on the episode today. And that is Santiago Rodriguez, who is the founder of Minteo. Minteo is a stablecoin issuer for Latin America. They've already issued a Colombian stablecoin, and they are well on their way to issuing several other stablecoins to meet the needs of people in Latin America. Santiago, welcome.
Hi, Sam. Thanks for having me on. It's great to be here. I'm really excited about what we're going to be talking about today.
Yeah, so we actually met at ETH Denver, and I've been really interested in how people are using stablecoins outside the United States, because I think my view is probably a bit myopic at times. I've heard stories on different podcasts, and I've read things in different places about how USDT on Tether is being used, or sorry, USDT on Tron is being used in various parts of the world, but it's not always the best. And so maybe we can start there. Like, why do we need localized stablecoins that are not the dollar in specifically Latin America?
Okay, so it's kind of funny, and I think this is going to be very obvious in hindsight. Like, what is the use case for like US dollar stablecoins right now? And a lot of it is obviously people who are in DeFi or in crypto. When there's a market drawdown, they want to be on a safe asset, so you want to have like dollars, but on chain. And that was sort of like the first initial use case for like dollars on chain. And then they started realizing a lot of people in other parts of the world really have a very hard time accessing the dollar. So if you live in Latin America, for example, like it's very hard to get a dollar account. It's probably like 5,000, 25,000 to get a investment account or a brokerage account, which, I mean, for the large majority of the people is very hard to do so. So, I mean, and at the end of the day, like a lot of these dollar-based stablecoins have been used just for like people saving money in Latin America. But what we're thinking is like, so that the use case there is like it's savings. It's pretty simple. And it's having dollars in a market drawdown on chain. And I think probably the best way to tell you how we ended up figuring out that it was necessary to have like local currency backed stablecoins is by telling you a little bit about our story, which is pretty interesting.
Yeah, I mean, you guys. So I was reading that you guys launched, or you raised, what was it, $4.3 million 2 years ago to be an NFT marketplace at first.
Yeah, we even raised money from OpenSea Ventures at the time. So I come from banking and fintech. I built a very big payments gateway in Latin America, which does like over $3 billion in payments processing a year. I really got into crypto after selling the company. I started like deeply researching Polygon, Solana, etc. And we realized, like, I mean, even though they're still sort of at a beta stage, a lot of these new layer ones and like new layer twos are much better infrastructure than what we already have in Latin America for moving money, for property, etc. And we decided to, like, with my co-founders, we said like, hey, how do we get more adoption of this thing going on? And at the moment, what we thought is like, okay, so like people in the US, they're investors, so they're used to like knowing where Tesla stock is, how Netflix is performing. People in Europe are savers, so they understand like savings interests. They understand 5% APY. And Latin Americans, like, we're fun, we're crazy, we're like, we love music, activities. 3.4% of like YouTube content is uploaded by Latin Americans. Something like 5 of the top 10 Spotify artists are Latin Americans. Like NFTs obviously make a lot of sense in Latin America. So we ended up launching an NFT marketplace. And one of the things we very quickly realized, and this was sort of at the same time the market started crashing, we wanted to get like big players on there. So sort of like companies who do real estate, companies who do large event ticketing. And we realized like this is not going to be possible on USDC or any other kind of like crypto tokens, so like Ethereum or Bitcoin or whatever, just because people are used to like locally operating in local currencies. Even though you might save in another currency, say for like people who live in the US, like even though you might save in Bitcoin, like you're not going to go and pay like X number of Satoshis for a can of Coke. Or you're not used to paying for like day-to-day things in Bitcoin. Like it's a savings currency. The dollars are a savings currency for us, but day-to-day we spend in like pesos, soles, like our local currencies.
Yeah, and also like the local currency goes up and down as well too versus the dollar. I think you said that if sometimes for like the Colombian peso, it could go down 10 to 20% a year, and then this past year it's gone up 20% against the dollar. So like when you're talking about using stable coins in your local economy, it has to have that reference price of whatever you're spending things on. It's too much of a ordeal to think about, oh, okay, well I have $200 and I'm going to spend, however many pesos here to buy some stuff. That it's just hard math, right? Same thing goes for Bitcoin as well too.
Yeah, it's exactly like that. So I mean, people are used to like operating in their native currency. And then I mean the Colombian peso, which is where I live, Colombia, it was 23.11% up against the dollar last year. It was one of the world's best performing currencies. So if I'd saved all my money in dollars and I have to pay taxes at the end of the year, I'd be pretty much screwed. So at the end of the day, people need local currencies. And if they're going to buy a tokenized house, they're going to do it in the local currency. If they're going to buy a tokenized ticket for like the Coachella equivalent, they're going to buy it on local currency. That's just necessary.
Well, can we take a step back first and talk a little bit about your payments company, because that's what you sold before you got into crypto, and you actually grew this thing to be quite a large payment processor.
Yeah, so we spent 7 years building Blipco, which is now called Wampy. It's just sort of an old school payments gateway or payments processor. We do the backend for a lot of banks. Right now, it's owned by Bancolombia, which is the biggest bank in Colombia and Central America. I mean, it's sort of like Stripe, I think, is probably the most similar company you could be at. So it's a payments API. It has a lot of stuff on the back end. We built new payment methods for Colombia using debit cards and lots of cool stuff. I think we ended up really understanding how the payment scene works in Latin America through doing that.
So how do things change? So when you switch from doing bank settlement transfers to doing stablecoin transfers, say through a payment processor, like what changes there? Like what kind of is it just operational on the back end of moving some pesos around, or like what actually goes into that?
I mean, and this is a great question, and nobody has ever asked me this, I think. I mean, bank code is spaghetti code.
I know. I have a friend who works at like a legacy bank, and I hear his stories about like just the red tape that he has to go through, and kind of the old systems that they've built on for the past like 20 to 30 years that just keep getting like rewritten and updated, but never like fully pushed out and completely done over because of like security issues or just bureaucracy or God knows what else. And so all these banks just have like a ton of like you said, it's just spaghetti code that you kind of have to build into.
Yeah, I mean, these guys, like, they've been like doing tech for like 80, 70, 60 years. So they get like different stuff and different standards from like all times in history. And then they have different products on different like systems, which is kind of crazy. So like credit cards are on like from the 80s or the 90s when credit cards actually started like booming. And if you look at like checking accounts are like on COBOL, on technology from like the 60s and 70s. One analogy for people who are not in tech I like to think of is like pretty much everybody built their own like sort of like highway with their own standards. So you're like driving and you're going on a cobble street, and then you're going like on brick, and then you're going like on asphalt, and then you're going on grass, because pretty much everybody like did whatever they could at the time. Whereas like for me, the great thing about like blockchain technology or crypto technology, however you want to call it, is like it's pretty much standard. It's open, it's clear, it's trustable, it's resilient. And in a lot of cases, like it's even like I mean, the things that got me into this were like seeing the TPS on Solana, which is like ridiculous. And back then it was like theoretically very high. Now it's gotten very high. And even when people criticize like Solana for going down, I mean, they still have better uptime than most of like the ACH systems in Latin America, which is kind of crazy. I think better than like most places of the world, pretty much outside of the US and maybe Europe, and some countries in Europe. So this is just better infrastructure. I mean, it's like if somebody like rebuilt the entire financial system from the ground up with better technology, they come up with blockchain, and that's what they did.
Yeah. And so with the addition of stablecoins, now you have a plethora of networks, in addition to Solana, Polygon, Optimism, Arbitrum, that are all kind of like vying for to be like the rails of money of the future. And being able to build on that with these open libraries, open infrastructure, really provides quite a opportunistic path going into the future, where you can now kind of harmonize all these systems under one thing by just having the reference asset, in this case like the Colombian stablecoin that you guys are building, or any other type of crypto asset that can now be have settlement finality and all the other things that come along with building on top of a blockchain network or an L2.
Yeah, exactly. I mean, you said it better than however I could have done it.
So when you're like looking at the Latin American market, like what is different about building there versus what actually exists for the United States, like for USDC or Tether or some of these other dollarized stable coins that you have? Like what goes into launching a Colombian peso stablecoin?
So I mean, and always in like in general, building for the Latin American market is as an entrepreneur, it's very cool. In the US, like there's so many things that have already been built out, and there's so many payment companies and fintech companies, etc., that have like pretty much like built every corner of the market. Whereas in Latin America, there's not that much competition, and there's like still so much to be done. So I think, and this is why I don't view ourselves such as as like a Tether or a Circle. I think more of Minteo as a Stripe, just because like what
Hmm.
we're building is more like a settlements layer for using stablecoins. I mean, we're gonna have to do a lot of APIs. We have to connect to like existing financial systems. We want to be able to do payouts, disbursements, collections, etc. FX. So like if you actually want to like get these stable coins up and going and like actually like build a better financial system, it has to be highly interoperable.
Yeah, that's a really important point. I think there's a growing trend now that we've seen kind of the first emergence of stablecoins, that uh, stablecoins are eventually going to be like a public good, right? It's just a reference asset on chain somewhere, and so building a business behind it is not going to be about the stablecoin. It's more about the middleware that goes in between, that connects everything. Because if you just put out a stable coin, people are just going to use it for gambling and leverage on chain. But to actually have day-to-day usage, you have to come in and build out all the architecture that, say, like a Stripe would, APIs, other types of middleware integration, so people can use it in their day-to-day activities.
Yeah, and I mean, if you think about it, like of course, like a US based stablecoin, like we were talking about at the beginning, like it's great for like Latin Americans who want to do savings. But if we launch like all these like Latin American currencies on chain, I don't think a large number of US people are going to want to be like, I'm going to like own Peruvian soles or Colombian pesos. And Latin Americans can just go to the corner and open a bank account and just hold their savings there. So what's the use case for these things? And it's for like getting things done that you can't do with your like own bank account. So like, and in Latin America, and this is no secret, like we're highly underbanked. A lot of the people don't even have a bank account, and it's not because they don't want to open one, but because it's too expensive, or it's too complicated, or you don't get enough functionality out of that. And I think this is sort of where like blockchain is much better, and this is where we like are obviously using stable coins, but there's a lot more like APIs we have to build on the back end, so like anybody can actually innovate on top of these stable coins.
Yeah. I think the thing to look at though is that when we're talking about moving to the money of the future, it's really going to be mobile based because I think if you look at mobile usage in Latin America, pretty much everybody has a phone now. Everybody walks around with what could be a bank in their pocket. And if the onboarding costs into a traditional bank are high, well, just build an app, right? And you can onboard somebody into like just a plain wallet or a more kind of regulated and well thought out app that allows them to make transactions and payments with a stable coin that has lower like carrying costs and transaction costs than what you would find in the bank.
Yeah, exactly. Or I mean, even the bank themselves, like if they want to do a neobank or innovate, normally they have to go to like a ton of different like infrastructure providers, which are complex. They're difficult. They have no standards. Whereas like even for the banks themselves, they can innovate using stablecoins, or like pretty much any new entrant into the system, or like foreign companies who actually want to be able to, for example, offer services to people in Latin America. And we've got a lot of interest there, like say companies in the US or Europe, which wanna better like offer services to like local customers, but they currently have no easy way of doing it. I mean, they'd basically be forced to like open a local affiliate and then local bank account, or they can just do it using like stable coins on chain.
So when you're looking at like go to market for entering these Latin countries that you're talking about Colombia and Mexico and a few other places. Like, how do you make that happen? How do you get people on board with actually using a, say, Colombian peso stablecoin or Mexican peso stablecoin, and grow the size of people using it? Because that's really at the end of the day what matters, right? It's not about how much you can bring on chain. It's more about how many hands and phones you can get into so that people can use it on their day-to-day basis.
So we very recently launched towards the end of last year, and we're pretty much gearing up our go-to-market strategy right now. And obviously, it's a lot about like distribution, finding the right partners. There's already a ton of people building very cool stuff on blockchain. So people who wouldn't do on-chain lending, people who want to do derivatives, people who want to do better remittances or FX for import-export. We've been working with all these companies, seeing how we can build a better API for them, a better dashboard, more complex services in the background, so that they can easily connect like to Latin America. And sort of the way I see it is like right now, like our currencies live on an island. We're pretty much isolated. And what we're doing with these things is like we're sort of like building bridges, and we call this like bridge markets or bridge economy. And we're bridging it to the rest of the world, say to like companies in the US who are like building all these cool things for like lending, derivatives, etc. That's how we're like thinking about our go-to-market strategy. It's just like through partners who are building cool stuff.
Yeah. And that middle layer that middle layer is really going to be the most important part of how can you get your technology connected into everyone else's technology as fast as you can, so that there's seamless onboarding from a bank or from any type of financial institution, so that they can, one-to-one swap into your stablecoin and then go use it in whatever sort of services they want.
Yeah, I mean, if you think about like, for example, the Swift network, like it's horrible. I mean, it takes several days to send a payment. Like, there's a bunch of like intermediary banks which you might not know about. There's no standard like number, or there's like IBAN, and then there's like BIC, and then there's like a bunch of things that people don't really understand. Even people inside the industry don't understand them very well. Sometimes it takes like T+1, sometimes it might be T+3 days. There might be a $50 cost like somewhere in the middle. Whereas, like, for example, with stablecoins, just basically like you send me one of your coins and I'll send you one of mine. And it's pretty much like, and if you're working on Polygon or Solana, it's pretty much instantaneous.
And the fees are like a cent.
Yeah, and in the sense,
Yes.
instead of like $50 or $100, which is what you would normally pay.
Yeah, that's really cool. I think that's the biggest opportunity, like especially with the Dinkun upgrade that we just had. We're now seeing gas prices across the board on all the L2s really, like for simple transfers or even smart contract interactions, go to either a cent or around there or even less than a cent. And that opens up a ton of opportunities to have, you know, widespread massive payments that can happen in local currencies for people that may just want to spend a couple of dollars.
Yeah, I mean, one of the core like promises or ideals behind like blockchain has always been like, this is better money. When you're paying 17 or $20 for a gas fee, it's not better money.
Well, I mean, if you're transferring $1 billion, I mean, I think it's negligible at that point, right?
And I would still doubt like so I mean I think they like and obviously a lot of people have been really sold on the promise of blockchain. I think in this cycle we're actually starting to see like the promise become like we've sort of been sold on the vision. It's starting to become true. There's always obviously been elements like decentralization which are core to it, but I think without low fees, without like high TPS, like it's always going to be very hard for this thing to like go massive.
So in these countries in Latin America, are the like local regulations and banks supportive of the introduction of stablecoins?
So I think, and I mean, in most countries, there's like no regulation for blockchain or stablecoins, etc., or nothing specific. Um, uh, and sort of normally, like there's nothing covering deposits law or securities law which covers stablecoins. I think Latin America hasn't been as hostile to crypto as some other countries have been. And I don't want to say anything about the SEC here, but like I think there's been a lot of hostility towards crypto in the US. We don't have the same sentiment in Latin America. I think most of the concerns from banks and regulators are actually very legitimate, and it's like, how can these things be used to launder money? How can these things be used for like financing terrorism and like guerrillas and like local groups which we don't like? And I think there are concerns that sort of make sense. Most of the time, they come because there's not enough understanding on the regulators' side, and I think like crypto is way worse to launder money because like you're sort of like leaving a public track out there. And the Chainalysis does a great report on this when they show the amount of like money laundering on like crypto versus the traditional financial system, and it's way lower, and it's gonna keep getting way lower the more like systems that like make it easy to do like on-chain tracking, compliance, etc. Possible. So I think as long as we're able to like sort of like make the concerns the regulators and local entities have solved in some way, I think crypto like has a lot of potential and there's a lot of interest, because obviously at the end of the day people understand like we're underbanked, like we need to like get more people on board, and if this is the way to do it, like I think everybody's going to be for it. We just have to figure out the concerns.
Yeah. At the end of the day, I mean, it's really about that middleware layer that we keep talking about. That is the kind of filter between everything that happens on chain, because you can track that, and there may be some illicit funds moving there. But as long as you can control the like onboarding and offboarding of funds and keep that up to compliance, you should be able to stop the majority of all, or at least hopefully the majority of all illicit funds that would pass through.
So I think compliance is like probably one of the key parts of our business at Minteo. And obviously we want to be that middleware for Latin America. So we're building a compliance engine. It has a very cool name. It's called the M compliance engine, sort of like MTech, which was what BMW had like back in the 2000s, which sounded very cool. And part of our objective there is actually to be very good at spotting anything that's fishy, anything we don't like on chain. We want to be very aggressive on keeping our tokens very clean and sort of everything that's going on very clean. And I think that's going to be the secret sauce to getting regulators and local entities working with us.
So what do you think the first few use cases are going to be for, say, your Colombian stablecoin or the other stablecoins that you're launching? Are they going to be for local activities, or is it more for like on-chain DeFi activities? What do you expect there?
I think there's going to be a lot of like effects and remittances. I think that's pretty interesting, and that's an industry that needs a big overhaul in terms of the technology they have. So I think Swift and ACH are terrible. I think stablecoins are awesome for replacing most of those systems. So like I really believe in like payments, payouts, and moving money internationally or cross-border payments. I think those are going to be the first things that start to take off.
Yeah. I mean, this is when you look at a DeFi exchange like Curve, that's kind of where they want to get, right? Is being the FX center for the entire world, where you have like a Colombian stablecoin that's paired against USDC, and there's billions of dollars of swap volume that's going through there, and it essentially will replace the FX markets in a way which is just better than what is built now. I know there's some really good like remittances companies that are out there that do provide very low cost services, but the ability to have instantaneous settlement to move funds within just a single click across the border really opens up a lot of opportunities, and to do it programmatically as well too with open source software. It kind of builds the foundation layer of the financial system or like the international financial system of the future.
I think a lot of those remittance companies which you mentioned are going to be using stablecoins and crypto on the back end within the next couple of years, just because it's faster, it's more efficient, it's instant settlements, which is hyper powerful. One of the things that you don't really think when you're sending money is like you sort of like you put your like dollars here, you wait a couple of days before there's like another currency, Mexican pesos here. Like there's something that's very stressful. Like even it's for like 2 or 3 days, like you don't have control of your money. Whereas with like stable coins, like you bring your dollar, like your tokenized dollars here, you get your tokenized pesos here. So you bring USDC, you get COPAM instantly. You know what the fees are going to be upfront. It's much less nerve-wracking. And I think even for the companies doing this, like they're going to start using this technology. It's just much better technology in general. And talking about pools, we have a small pool on Uniswap. We're starting to test this out. We haven't gotten Curve yet, but we are on Uniswap. It's probably the easiest way to actually get like if you're a US citizen, you want to get your hand on some Colombian pesos, it's the easiest way to do it in the world right now. Just go and buy them there. It's pretty simple. It's pretty cool. It's the easiest way to send money right now. Hopefully, we're going to be able to do it for like a lot more currencies very soon, which is what we expect to roll out towards the end of Q2 this year.
What was really interesting was that this Uniswap pool is deployed on Polygon. And you were telling me yesterday that Polygon has been really pushing hard on BD efforts to capture as much of the Latin American market as possible. How has it been working with them? And what other companies have you seen kind of brought to the table? Are they helping in partnerships and relationships there?
So yeah, I think Polygon has done a great job in BizDev. We're very close to them. We've done a couple of small events together. We're working on some other stuff. A lot of the local companies doing DeFi and doing things on chain are using Polygon. So a lot of local startups are like Minteo, Suru are using them, which are like big local startups. And I think they've just done a good job of like promoting themselves locally, working with the community, highlighting the advantages of like their technology, etc. They're probably the blockchain that's most visible right now in the town. And there's a lot more like behind them, but I don't know if I should mention names.
Oh, it's fine. Looking at Colombia, there is an incredible amount of space for you guys to move in and grow your stablecoin. I was just looking at the GDP of Colombia. It's $314 billion back in 2021. There's about 156 or what? Sorry, is this one quadrillion? Let me check this. Oh yeah, 156 trillion like Colombian pesos out there. So being able to move into this market and take a share of GDP, move it on to a Colombian stablecoin, I think is a pretty wide open green pasture. As you guys are really the first people to come in, issue this stablecoin, and be able to grow the market, and also build a lot of the payments technology. It seems that there's a ton of opportunity for growth here.
Yeah, I mean, I think Latin America is a huge untapped market. If you look at Mexico, Colombia, Brazil, I think there's a huge opportunity for innovating in fintech, and I think stablecoins are the way to do it. I mean, a lot of people have realized this by this point. That's why there's a lot of VCs coming down to Latin America. We've had some very successful companies growing in the past, like Rappi, Nubank, etc., which have sort of like been successful at this.
Yeah. Yeah, and those other economies are nothing to bat an eye at as well too. I mean, the Mexican economy and the Brazilian economy both have GDPs over $1 trillion. So the implementation of stablecoins for even something like remittances, or also for just daily payment activity, there's an incredible amount of market share that can be taken away from the banks, like you said.
I don't even think it's like market share like we're taking from the banks. It's like we're reaching places where the banks can't reach. Yeah, I mean, I haven't looked at this statistic in a while, but like 50 or 16% of people in Mexico are underbanked or basically have no financial services.
But they have mobile phones though. Yeah.
Yeah, and it's the same in Colombia. I mean, even though people might like in a lot of cases have like neobank accounts, like they don't use them, and it's just like traditional banks. Like I mean, they're built for tending to people who are wealthy or who have more resources, or for like corporate customers. The technology they have does not. Their unit economics don't make sense for serving the majority of the country. And this is where I think like blockchain comes in. I think it's going to make it possible to build services for like the entire population of these countries. It's impossible to build it out with the existing tech stack.
I've
And I'll give you a cool analogy here. So landlines were never reached mass market adoption in Latin America. Like telephone landlines, just because like it was very expensive, like putting telephone posts on every corner, getting a landline into every house. So like most people in Latin America never had access to a landline. Like a small percentage of people did, just because it was too expensive. And when cell phones were invented, all these like telco companies back in the 80s and 90s, they had a hard time like raising money because a lot of people in the rest of the world were like, do you think Latin Americans are going to use cell phones? But the cell phone tech was so much better than like landlines that like cell phone penetration is very high. I think like, I mean, there's like 1.2 like cell phone numbers per Latin American or something like that. I mean, we have more cell phones than people, and penetration is even higher than in the US, for example. But we sort of like skipped landline technology. And I think the same thing could probably happen. Like, I mean, probably we'll see like mass adoption of like stable coins before like credit cards in Latin America, which would be kind of crazy. But like when you understand like, or we'll see mass adoption of credit cards on stable coins rather than on like fiat, like traditional fiat money in Latin America. Because like the old technology was too expensive and it was never like good enough for like mass adoption.
Yeah, I'm just looking at the statistics. So back in 2021, the rate of mobile phone penetration was over 70% per 100 inhabitants, which is pretty much everybody, right? Like you might have some elderly folks who may not have a phone, or some people who just don't want them, but that's pretty much everybody. And if you have a phone, you can have a wallet, and you could have an app that serves you with stablecoins. And I think that's the biggest opportunity coming into this next decade, is to turn that phone into a banking center at a very low cost that doesn't have any of the overhead that the banks does.
Yeah, I completely agree with you. I think that's the future of like blockchain or crypto tech in Latin America.
Yeah. Well, that's really great. I'm really excited to hear about your guys' launch of Minteo, and also the introduction that you've had of the Colombian stablecoin, and also your plans for launching a Mexican stablecoin. I believe there's also a Brazilian stablecoin as well too.
Mexico is coming first, then probably we'll have Chile and Peru, and then Brazil. That's sort of the order we have it in. Just because of the way we're working with local banks, the regulators, etc.
And like, how big is your team? Have you been growing pretty fast?
We're a small team. We're like there's like 15 of us. Somebody part time. I mean, we're a startup, so we're very efficient.
It's pretty incredible that you can have these kind of world-changing businesses that are being built with just a few people coming into where we are in this time and place in the world. We see it with the AI companies, we see it with stable coins. You don't have to have like huge overhead and huge staff count to be able to get to a $1 billion or 10 billion or even $100 billion worth of value.
Yeah, I mean, I think there was a tweet about from Sam Altman the other day where he said like we're probably gonna see the first like billion-dollar company, AI company, just run by one person, just because you can get so much done with AI, and it's the same for crypto. I mean, when you have so much like infrastructure already built out, like it's so much easier to like get something like this done with like a small number of engineers. Whereas if in TradFi we'd need like an army of people to build the same stuff.
Well, what a journey you guys have had from launching a NFT exchange to transitioning into launching several stablecoins across Latin America. Be really excited to see how you grow over the next couple of years and the penetration that you're able to make with these stablecoins into the exchanges and into the banks and across the payment services in the region.
Yeah, that's thanks for that. That's for us, it's awesome. I mean, at the end of the day, we've always thought about ourselves as solving the same problem. Is like this is better technology. How do we get mass adoption of these things? We started by launching an NFT marketplace, and halfway through the process, we realized like this, like we're never going to get mass adoption without like stable coins or a stablecoin settlement layer and all the middleware, like we mentioned during this call. And I think like it's a bigger goal for us. It's very like exciting to be able to build it out. We think it's gonna be very obvious in hindsight, and it's very fun day to day to like have to figure these things out. So like it's very exciting. We have an awesome team. We're really happy to work in this space. I personally love working in crypto. I think everybody I meet is like amazing. Like there's so many like smart people. And this is what people from the outside don't realize about it. Like it's just like very intellectually stimulating to like talk to a lot of like brilliant people who are like thinking about how can we make this thing much better. And sort of like what you feel at Etemper, like because when you see like Twitter from the like crypto from the outside, it's just a lot of people who look like they're gambling on meme coins or shit coins. And when you go to these events, you realize like, oh, these are the people who want to make a better financial system so that like future generations have like can have like much better quality of life and much better access to like goods and services, which is awesome.
Yeah, and what you guys are doing is the right way forward. It's the building the stablecoin. I like to think of it as a public good, and then also pushing on that middleware layer so it has connectivity into the real world, which is where most matters and where you're going to see the most growth at the end of the day.
Yeah.
Yeah. Well, thank you so much for being here, Santiago. Everybody can go check out Minteo at minteo.com. And where can people find you are you on Twitter?
Yeah, I'm on Twitter. It's my handle is really complicated. It's at Santi_A_gogo. Santi A Gogo. I don't know if I'm this first person on Twitter, so and check out Minteo.com. We're gonna revamp our website pretty soon. It's not really informative right now. It's sort of a placeholder website, But we're gonna have a very cool website up and running in the next couple of weeks.
Very cool. So we actually have a couple of other Latin American guests coming on this week. We're going to be talking with Lemon on Friday or sometime next week, who's the largest exchange in Argentina. And then I'm also working with Christian, who's one of your VCs that invested into Minteo, to get him on to do an in-person interview here in New York. So got a bunch more stuff coming up to talk about Latin America, and we'll be talking about stablecoins quite a bit and how it affects the local economies. So Santiago, thanks so much for being here, and make sure to subscribe to Leviathan News. We're at Telegram and Twitter at Leviathan_news. We just launched our point system for people to submit headlines to us. So come join the Squid Cave. You can find that on our Telegram, and we will see you tomorrow. We are going to have Angus from Chronicle Labs. They are the oracle that is providing services for the DAI, aka MakerDAO. So tune in to that, and we'll see you tomorrow.
Thanks for having me.